Good evening, everyone. Welcome to your Fundamentals of Financial Accounting class. My name is Olga Gotspa. I will be one of those. I'll be taking you this model for this semester. All right. So today we are considering something really very important to financial accounting, and that's we are looking at IAS 16, property, plant, and equipment. And what are we doing in essence? We're actually accounting for tangible non-current assets. You must understand that the IAS is it makes International Accounting Standard Board, of course, and they are issued by the International Accounting Standard Board. IAS, International Accounting Standard, rather, they are issued by the International Accounting Standard Board. Of course, currently they are issuing, they've stopped issuing IAS and they are issuing International Financial Reporting Standard, IFRS. And so IAS 16 has to do with property, plants, and equipment. Now, before we delve into IAS 16, I just want us to look at our learning objectives for today. And then we'll look at basically what I wanted to get out of this class is you understand the definition of property, plant, and equipment as prescribed by IAS, and of course IAS 16, and then you identify example of property, plant, and equipment. And of course, one of the most important things, you'll be able to recognize property, plants, and equipment. There's a criteria that has been stated by the standard for recognition. And not just that, you'll be able to demonstrate accounting treatment. Of course, because of the shortness of time, we will not be able to cover the entire gamut. And so this lecture is first in about 2 lectures that are going to cover IAS 16. I hopefully will be able to cover it. Much as I wanted to understand the lectures, I don't want to go too fast because that will have to defeat the purpose of these lectures. All right, so these lectures are being recorded. So if you need, so that after the entire class, you can have access to the lectures themselves. Okay, so thank you. And so I'm talking about the learning objectives. Of course, this has some prior, there's implicit assumptions here that you know how to recognize assets. And of course, not just that, you'll be able to define assets as a whole, and then of course, the classification of assets. But I'll just possibly do a little roundup. The International Accounting Standard Board define an asset as a resource that is controlled by an enterprise, and of course, as a result of past events, and from which future economic benefits are expected to flow to the enterprise. So it means that, number one, the resource is controlled by the organization, and as a result of past events, and not just that, future economic benefits. Of course, that benefits is in business. It's always going to be economic in nature. It flows to the enterprise. Businesses are fundamentally profit-driven. And so the essence of owning assets is to ensure that there are economic benefits that are derivable from them. So, but today we are going to look at, PPE, as I've said. Basically, assets are, either tangible or intangible. And then the tangible assets are subdivided into current and non-current assets. Of course, before now, you see financial statements used to say state fixed asset. Of course, if you see such textbooks, you see fixed asset. Don't be confused. Fixed assets currently called non-current asset, and non-current assets is the property, plant, and equipment, which has been covered by IAS 16. Okay, having said that, what is the definition for property, plant, and equipment? The standard defines IAS. It says they are tangible, property, plant, and equipment rather are tangible items which fulfill the following criteria. Now, this is very important. Number one, they have a physical form of substance that they exist physically, and therefore they are intangible. Number two, they are held by the entity for use in the production or supply of goods and services, for rental to others, or for administrative purpose. It means that the essence, they are being held. Like if there is a company has a motor vehicle, for instance, it is used in the production or supply of goods and services. And of course, if it's for rental, it means it is still being held as it brings in economic benefits to the company. Now, and then the next is it's expected to be used in the business for more than one accounting period. And that's what distinguishes it from current assets. Current assets are also tangible, but because they are the duration for current assets is mostly one accounting period. Of course, there is a concept, accounting is divided into periods. Of course, that's why we have what we call periodicity. It means that financial reports are always in periods. You could say 6 months or 1 year, which is most common, and on like that. So you can just read up your accounting concept or convention, you see periodicity there. Now, the next thing we want to look at is just common examples of PPE. Of course, you see the pictures there shows us some common examples. You see an airplane there. It's if a company has a plane, it's always a fixed asset. And because it's really very important to properly account for PPE because of the capital requirement. There's substantial capital being put out in order to purchase this asset. And so there is need for proper accounting in order to determine the revenue derivable from them. Okay, so and then where you see that as furniture and fittings, back in days, when you see a financial statement, you see fixed assets are, written in there. You see that such fixed assets are definitely you see motor vehicle and motor vehicle, furniture and fittings, office equipment, but because of IAS 16, everything is, has now been is called together as properly plant and equipment. All right, having said that, because of our time, let's just go. So what's the initial recognition? In line with IAS 16, an item of PPE may not be recorded in the ledger or reported in the financial statement. In the financial statement, unless it meets the following criteria. And what are those criteria? Number one, the risks and rewards associated with the assets accrued to the business. And number two, it is probable that there will be inflow of economic benefit associated with the asset. And of course, the cost of the asset can be measured reliably. I mean, those things together, are very incidental to initial recognition of item of PPE. Now, let's go further because of our time. Now, measurements of PPE at initial recognition. Now, in order to measure, because basically the essence of this whole topic is how do we recognize, and of course, how do we measure? So at initial recognition, what are those elements of cost? Number one, the purchase price, including import duties and non-refundable purchase taxes. That's what makes up cost. Of course, you have to deduct your trade discounts and rebates, and the cost directly attributable to bringing the asset to the location also have to be added, like transportation and every other thing that has to contribute. It has to be added. The cost directly and necessarily incurred for item to operate in the intended manner, and the anticipated cost of dismantling or removing the asset together with any site restoration, and of course the cost of financing. The next we want to look at is a typical example of how. Look at this example. Bonnet has recently purchased an item of plant, the details of which are given. Of course, it's the everything. We are basically asked to calculate the amount at which the initial cost of the plant should be measured. You see the basic list of the plants. We have trade discount at 12%, and of course the other ancillary costs. Let's just go to the solution to look at how this question, the question has been solved. Of course, you can see the computation of cost. There is the purchase price with less the discount. Remember, the discount was 12.5%. 1 minus 0.125 gives 0.875. And so we've already deducted the discount, and then we'll have that. Shipping and handling costs, estimated production, and every other thing is added. Of course, remember the additional information told us about how the 14,000 was arrived at. So we have to go back and deduct the 6,000 and of course the labor cost. Don't forget, this question is not really very difficult. It's simple because you should also understand that in trying to solve this question, you must account for discounts. It means that you have to account for the discounts of 18,000 dismantling cost, 15,000 for dismantling, and 3,000 you have to account for it. And then how do you do that? You discount it. The discount factor of 6% for 10 years using it's actually 0.584, and that's why we will be able to arrive at this amount. I mean, it's really very simple. It's something that if you don't know how to do that, you can always just ask me, and then I'm going to teach you how to do it. It's simple. Okay. So the other subsequent expenditure, which we must also look at, replacement overhauls should be capitalized, and other subsequent expenditure should be recognized as expense in the period in which it is incurred, and of course the day-to-day servicing costs are revenue expenditures. Do not forget that. I've provided further readings, for us to be able to go through. These reasons are very important and part of the course, and it helps us to understand. Of course, before that, we look at areas to be covered. In next class, we are going to look at measurement after initial recognition, and that will take us to both the cost model and revaluation method. Of course, we are going to do more computation, and how do we account for depreciation of PPE, and of course, derecognition. Finally, if you have any questions, please, you can ask me or you can send me an email. Thank you very much.